Hey, I'm going to show you a little bit what I do with this forex stuff. Um, I've got all these different currencies here. These are different currency pairs. There's seven of the most highly traded currency pairs. So if I can show you top seven currency pairs, um, you've got the Euro USD, Japanese yen, Great British Pound, US dollar, Swiss franc, the Aussie dollar, Australian dollar versus US dollar, Canadian dollar, and New Zealand dollar, US dollar. These are the top seven most traded currency pairs for the foreign exchange market. So I've got data for each of those here. Right now, I want to show you the USD Swiss franc. So I do this every day. I've got a year's worth of data here. And if we come down to today, today's February 24th, I need to plug in data for this. Now, let me explain what's going on here. Actually, let me enter in today's data first, then I'll explain what this is. So online, I'm going to go to investing.com and get the data for the USD Swiss franc. And I'm going to come here to historical data and I'm going to look for today. These dates are wrong. Today's actually the 24th. This is the data for the 24th. So this is what I'm looking for right here. And these are simply open, high, low, and close prices. So pretend this is a daily session. You open here, you close here. It looks like today, currently we're down, and it'll show that here. The high was somewhere up in here, which is this. The low down in here, which would be that. So I'm simply just going to copy that into my chart. Today was a down day, only by a little. This is going to bug me. I'm going to go ahead and fix that. Wrong color. Let's see. We opened at 0.8980. The high was 0.9. The low was 0.8953. The close or current price is 0.8974. And today give me 1 second. It is currently a down day at 0.03% negative. This is an average price. That's simply the average of the high, low, and close. That gives you the average price. Fix the formatting here. All right. So now, these are some target numbers, and I actually need to extend these for the next day. Okay. Now, I programmed in a sell trade because I thought, according to all of this data here and looking at the charts, I thought that the price was going to go down. So I entered in a sell. The order type is a stop order. My target price is 0.9018. So let's see if the price hit that. It started here at the open. It went to a high here and a low here. You can see that it did not hit my target entry price. So we had no order go through this day. So we're not going to make or lose any money on the franc today. So that means I'll have to figure out what kind of order I want to put in for tomorrow. So this is going to complicate things a little bit, make this video a little bit longer. But so be it. So I'm going to copy this data, the open, high, low, close, to all of these other pages. Now this is the real beauty, not having to do this math by hand. It takes a long time to do all that. each one of those columns was a different formula. And same here. Fix formatting. All right, that looks good. First, I'd like to copy over all this data, and then I will analyze it. All right. 1 second. Not quite done here. This price is lower than this price, so I'm going to bold that and make sure that references this 302, 302. We're good. All right, these colors are off. All right, let's go to failure swing. Not going to explain what this is really at the moment. It's a 20, so I'm going to find row 20 here and make that 7. It was 6. All right, let's analyze this data. I've been keeping notes on a notepad here. So this was my trade. It did not execute, so we're going to have new information here in just a second. All right. Let's start at the end with the volatility. These two I don't really use for much analysis, so I'm not going to even touch on those in this video. Volatility, let's see. Need this again. And I'm not going to get into the technicalities here. This means a long-term short. You can see it's a long-term gain, long-term short, long-term long, and short. It's just the long-term momentum of the market, and it's anticipating a downward momentum. So, but that could be very short. It could go on for a long time, but could switch around and go back the other way fairly quickly. So SAR is short. That's what this is. DI 14 short, whichever column you have here. It's currently red, so it's favoring a short. Let's look at the MACD. Your 26-day moving average is down. Looks like our MACD is right on the verge of being a double confirm, so I'm gonna say short. MACD short. It's telling us to short. Let's look at the momentum. The RSI is pretty low at 0.35, so that's indicating to me again that this should be a short. All right, I'm not going to look at the charts right now. I'll save that for another video. I'm going to put in a sell, and it's going to be a stop order. I want to enter, let's see, the price right now is 89.74. I don't want to enter quite there yet. It looks like the failure swing is typically, most of the time it's somewhere 12 pips or under. So let's see, is this 12 pips more than this? And it's close. So I'm going to put my entry here. I'm going to put my stop loss. Well, my target per entry price is here, 0.8998. My target cash out, I'm going to put, let's see. I'm going to go down lower. I'm going to go down to here. So this is going to be my target, 0.8904. All right, and my stop loss, I'm going to put a little beyond this, probably, let's see what the highest high was last week. Looks like 90.55, so I'm going to make it, I just want to go a little beyond that. So I think I'm going to go to 90.65. 90.65. So you can see that was the same stop loss as the previous trade that did not go through. All right, now I need to calculate my volume. How much do I want to risk? Where's my calculator? All right. So I'm doing a sell. I want to enter here. This is what I'm willing to risk, the price going up to here. So I'm going to take the larger number, 0.9065, and subtract my entry to 0.8998. That's 67 cents, or pips is what you want to call it. So I want to risk $200. I want to divide that by 67. It's 2.9. I'm going to round that to 3. So I'm going to do a volume. I'm going to buy a volume of 0.3 lots. Okay. If I hit my target here, pull that calculator out again. If I hit my target, let's see, I did clear this. If I lose, I'm going to lose 67. We already calculated because that's the difference from between my enter and my potential loss. That's 67 pips. Now, a pip is one of these. So think of it as like micro cents or whatever. It's just each number. So I want to risk $200. I'm going to divide that by 67. That gives me 2.98 cents that I can risk per pip. I'm rounding that up to 3. So, I'm sorry, $3 per pip. Wait, no, 30 cents. I'm sorry. So, now let's see what the difference is in pips between my profit and my entry. So I'm going to do 0.8998 minus 0.8904. That's 94. So if I do 94 pips times $3, so my win will potentially be $282. I'm risking 67 times $3 is 201. So I'm risking 201 for 280. All my data here is indicating that the market is probably, it looks like it's going down. I don't think this number here, this target, is out of the question for how low things have already gotten in here. So I'm betting that it's going to go that low before it goes up to a price that's going to stop me out and make me lose. So hopefully I'll win close to $300 on this one trade. Now, it can take a couple days for the trade to go through. It could take up to a week or two. But what's so interesting is if you trade on each of these, I mean, right now we're risking $200 for a potential $300 gain. I mean, you can see how much money, if you could have a few orders go in per week on each of these. So, I mean, 300 times 7, that's $2,100 a week. That's just if you have one trade go through on each of these currencies. So huge potential gains on that. Very exciting. Yeah. Thanks for watching.